The CEO of Nvidia, the most powerful man in the semiconductor industry, walked onto a stage in Taipei, looked at the audience, and said 4 words about Marvell Technology. The next trillion-dollar company. Ladies and gentlemen, the stock surged 25% in pre-market trading. And it had already been up 360% over the past year before today. So what is Marvell Technology? Why has it been one of the best performing stocks in the entire market? And what does today's announcement actually mean? Let's break it down. Marvell Technology is a semiconductor company founded in 1995, headquartered in Delaware. But forget what you think you know about chip companies, because Marvell does something different from Nvidia, Intel, or AMD. Most people know Nvidia builds AI chips. Fewer people know that the companies Nvidia sells to, Amazon, Microsoft, Google, also want to build their own AI chips. That second group is exactly where Marvell lives. Marvell builds custom AI chips called XPUs for the biggest cloud hyperscalers. Amazon's Trainium chip, Microsoft's Azure Silicon. These companies want their own AI processors, but they don't want to design them from scratch. Marvell does that work for them. On top of that, Marvell makes the networking and optical interconnect chips that allow thousands of AI processors inside a data center to talk to each other at extraordinary speeds. Huang explained it clearly on stage. When you take a computing problem and distribute it across an entire data center, what connects all those chips and moves data between them becomes just as important as the chips themselves. That is Marvell's lane. The data center segment now represents 76% of total company revenue, growing 76.5% year over year. The 360% run over 12 months was not random. It was driven by a sequence of real milestones. Marvell's custom chip revenue hit $1.5 billion in fiscal 2026. The company then raised its fiscal 2027 revenue guidance to approach $11 billion, more than 30% growth, and guided fiscal 2028 revenue to approximately $15 billion with non-GAAP earnings per share well over $5. These are not speculative projections. They are backed by signed design wins with the 3 largest cloud companies in the world. Then came the Nvidia relationship. Nvidia made a $2 billion investment in Marvell and deepened an alliance around NVLink Fusion, which positions Marvell as the preferred custom silicon partner inside Nvidia's AI infrastructure ecosystem. And today, at Computex 2026 in Taipei, Jensen Huang made a surprise appearance during Marvell CEO Matt Murphy's keynote, spent 10 minutes on stage with him, and publicly predicted Marvell would become the next company to surpass $1 trillion in market capitalization. Huang directly linked Marvell's role in AI data center interconnectivity to the explosive growth in AI computing demand and revealed that Nvidia has made a strategic investment in the company. In response, Murphy said, "Thanks, Jensen. Just keep following along." The bull case for Marvell is straightforward and well supported. CEO Matt Murphy has told investors that AI now represents the majority of data center revenue and that custom AI design activity sits at an all-time high with over 50 opportunities across more than 10 customers. The pipeline is not slowing, it is accelerating. Marvell is riding 2 powerful trends simultaneously: custom AI chips and optical data center components. Both are essential infrastructure plays with multi-year visibility. Data center equipment growth is essentially locked in for the next 4 to 5 years at around 25% annually, and the switching costs are enormous. When a hyperscaler like Amazon commits to designing a custom chip with Marvell, it takes years to develop and is deeply integrated into their infrastructure. They do not switch partners lightly. That creates the kind of sticky, recurring revenue relationship that Wall Street pays premium multiples for, but the bear case is also real and you need to hear it. The gap between Marvell's current $191 billion market cap and a $1 trillion valuation is enormous. Reaching $1 trillion would require the stock to climb more than 400% from where it stood before today. Jensen Huang's words were powerful, but words are not contracts. Customer concentration is a serious risk. The data center segment represents 73% of total revenue, and net insider selling has occurred across 94 recent transactions. When insiders are selling while the stock is at all-time highs, that is worth noting. Broadcom is viewed as the undisputed market share leader in custom AI compute chips, and intensifying ASIC rivalry is flagged by analysts as a key downside risk. Marvell's design wins are real, but so is the competition chasing the same hyperscaler budgets. And finally, the consensus analyst price target sits at $177, well below the current price above $219. The stock has already run past what most analysts consider fair value. That does not mean it cannot go higher, but it means the margin for error is thin. Marvell Technology is not a household name. But inside the data centers running the AI revolution, its chips are everywhere, connecting the processors, managing the data flows, and enabling the custom silicon that the world's biggest tech companies are racing to build. With hyperscaler design wins at Amazon, Microsoft, and Google already in production, and now a public endorsement from the most influential CEO in the industry, the narrative momentum behind Marvell is as strong as it has ever been. Whether Jensen Huang's prediction becomes reality, or whether the stock is simply getting ahead of fundamentals after a 360% run, is a question the market will spend the next several years answering. Hit like if this helped, and subscribe so you don't miss the next deep dive.